Good evening, students. I hope you have solved the question that I had given you in the last class. Yes, so are you ready with the answers? Good evening, Kaushiki. Are you ready with the answers? Yes, and have you revised the rest of the PGBP chapter because that's what we are going to solve today? Yes. Okay, so let's get quickly started because we have to solve a few more questions also on PGBP. So the additional information, what we had done in the last class was this much, right? Now we are on the additional information. So opening and closing stock for the year was rupees 55 lakh and this was overvalued by 10%. The closing stock was 54 lakh and was undervalued by 10%. So how would you do it? Good, Kaushiki. Yes, how are we going to do it? What would be the adjustment over here? Opening and closing stock. Yes. Past students. Yes, Kaushiki. So what adjustment you would make first for the opening stock? 55 lakh into 10 divided by 90? No. No, Kaushiki. Yes, Janvi, correct. It is 55 lakh into 10 divided by 110 and not divided by 90, Kaushiki. Because the closing stock is overvalued. So there's an overvaluation of the opening stock and undervaluation of the closing stock. But what you would do, whether you would add less, yes, Kaushiki, correct. So whether you would add less, what you will do for the opening stock? Yes. What are we going to do? Add or less fast? Janvi, yes, that's correct. But what you will do, whether you would add it, less, deduct it, what you would do? Add. Kaushiki, yes, we will add the opening stock. How about the closing stock? So the opening stock which will get added is 55 lakh into 10 divided by 110. This you are going to add it. Why? Because opening stock is overvalued. So we have to add it back because it has been reduced from the profit. Now we will add it back. And the closing stock was undervalued. So this also we will add it because this needs to be added. 54 into 10 divided by 90. Correct? Okay. Next is the machinery was acquired from UK for 2.5 lakh pound on 9/9/2022. The rate of exchange on the date of acquisition was rupees 90. The assessee paid the amount on 3rd December 2022 when the exchange rate was 99. The trial run expense rupees 2 lakh and custom duty was 20% of the purchase price. The assessee financed the machinery through the bank loan of rupees 10 lakh and interest during the year was 2.5 lakh. The details of the other assets are also given, which is computers installed in the factory and in office, factory building, office equipment, EPBX and mobile phone. This is all for the purpose of what? This is all for the purpose of the depreciation. So first, you are going to tell me about the cost of acquisition of the plant and machinery. What would be the cost of acquisition? Yes, what would be the cost of acquisition of the plant and machinery? Calculate, please. Yes, tell me one by one. First, we are going to put the actual cost, okay, for the depreciation. First asset is plant and machinery. The actual cost is 2.5 lakh pound into how much is the exchange rate? The exchange rate is 90, right? The exchange rate is 90. How much this is coming to? Two crore 25 lakh. So 2.25 crore. Fine. Then what about the exchange rate? Yes, what about the exchange rate? What you will do? The difference in the exchange rate. Yes, all of you, whether exchange rate will get added, will not get added. Good evening, Viraj. Yes. Faster. Yes. Add in the cost, right? Or reduce from the cost. Or no effect. Yes. So the exchange difference which is there. What is the exchange difference that we are finding over here? What is the exchange difference? So what does it say here? The exchange rate was 99 when the amount was paid, right? So this 9 rupees, the exchange difference that you are looking at, right? That will get added. That will be capitalized, right? By that, my plant and machinery cost will get increased. So what does section 43A says? Section 43A, this is as per which provision we are talking about. How do you say that the exchange rate difference needs to be added? Where is it written? Who is telling you? Which particular provision is telling you to capitalize this? So what does section 43A talks about? Section 43A is talking about the effect of the rate of exchange. So what does it say? Where an assessee has acquired any capital asset from outside India for the purpose of his business or profession, and because of the change in the exchange rate during any previous year, after the asset is acquired, and because of the change in the exchange rate, there is increase or reduction in the liability of the assessee at the time of making the payment, then the increase or the decrease, which is the exchange rate fluctuation, needs to be added or reduced from the cost of the asset. So I wanted that particular answer from you. So which provision is asking you to add that? You, all of you have given me the answer, ma'am, add it in the cost. But from where are you getting that authority to add it in the cost? Which provision in the exam you need to write that? About section 43A. So if, let's say for example, if I would have told you here that the payment has not yet been made, but the rate of exchange as on the 31st March 23, which is the closing date, is 99. Will you still add that exchange difference? The payment has not yet been made. So let's say, for example, if instead of this, I would have written here the rate of exchange, let's say, sorry, not this, the rate of exchange, if let's say this point was not there, and instead I would have written the exchange rate as on 31st March 23 was 99. Then will you still add this amount? Will you still add the $9? No, Janvi, then you will not add it. Then you are not going to add that. Why? Because what does section 43A tells you? Section 43A tells you that only at the time of payment, if there is increase or reduction in the liability, then you need to add or reduce from the cost of asset. So if the assessee has acquired any asset and in consequence of the change in the rate of exchange, there is increase or reduction in the liability, then at the time of making the payment, towards the cost of the asset, or even if let's say, for example, the loan is borrowed, for the purpose of acquiring this asset, if I would have not self-financed this asset, but I would have borrowed the loan from outside India, the loan should be borrowed from outside India in foreign currency, then any increase or decrease in the rate of exchange will be added or deducted from the cost of asset. Are we getting that? So if instead of self-financing, I would have taken the loan, but the loan should have been in foreign currency, then any increase or decrease would be added, but only at the time of payment. Are we getting that? So the exchange rate difference, which is 2.5 lakh into 9, needs to be added at the time of payment, since there is increase in the liability at the time of payment. Are we getting that? This is section 43A. This is as per section 43A. So how much does it come to? 9 into $2,50,000. Sorry, pound. 22.50 lakh. This is lakh. Okay. Next is the trial run expense was 2 lakh and custom duty was 20% of the purchase price. Yes. Trial run expense. Yes. Yes, Chanvi, anytime at the time of payment, when I'm clearing the payment for that machinery, I need to add that. Yes, trial run expense and custom expense should be added. Okay, perfect. Kaushiki. So, the trial run expense and the custom charges. right? Trial run and the custom charges. What were the expenses? 2 lakh and 20% of the purchase price. So this is going to be 2 lakh and 20% of the purchase price comes to how much? 2 crores 25 lakhs into 20%, right? 45 lakh. Are we clear about this? Okay. Next is the assessee financed the machinery through the bank loan of 10 lakh and the interest during the year was 2.5 lakh. Yes. Also tell me the provision from where you are giving the answer, based on which you are giving the answer, because that is more important to me. Yes, correct, Janvi, but based on which provision you are saying? Yes, Pastor. So, explanation 8. Explanation 8 to section 43.1. Which explanation? Explanation 8 to section 43.1. What does it say? It says that where the amount is paid or payable in connection with the interest on acquisition of the asset. Interest is paid in connection with the acquisition of the asset. The amount after the asset is put to use will not be capitalized. Amount after the asset is put to use will not be capitalized, meaning the amount till the time asset is put to use will get capitalized. So what is the contrary? What we are getting out of that is that it is saying that the amount after the asset put to use will not be capitalized, meaning the amount till the time asset is put to use will get capitalized. So the interest which is there, how much interest is paid? 2.5 lakh will get capitalized. 2.5 lakh will get capitalized. Are we getting that? Yes. Let me give you one more adjustment over here. The bank waived the loan to the extent of rupees 1 lakh. What will happen in this case? Janvi, as far as you can remember, because see, that's the whole point why we are into this lecture is that because the moment I'll be discussing with you, somewhere or the other, it will get register in your mind. The moment you will write down the section number will get register in your mind. In case you are able to reproduce that section number, it is an added advantage always, right? Because then what is the differentiating factor between your paper? if you are able to reproduce that, then it is always an added advantage. So that's why I am discussing these sections with numbers with you along with the number, so that somewhere it stays with you, because as and when I repeat it, you will also register it. Janvi, no, there is another adjustment to that. Interest is already paid. There is no question about interest. I'm talking about the bank loan, the amount waived off. Yes. Yes, Janvi. No, Kaushiki. But Janvi, again, which provision you are relying on? Okay. So understand this thing very clearly. So this section again 43 talks about the actual cost of the asset. The section 43 of the Income Tax Act talks about the actual cost of the asset. Right? Now, explanation 10 and the main portion of 43.1. What does it say? The main portion of, not the explanation 10, sorry, the main portion of 43.1 says that actual cost of the asset to the assessee means what? Actual cost means the actual cost to the assessee reduced by that portion of the cost, if any, as has been met directly or indirectly by any other person or authority. So any bank loan waived off is nothing but the portion of the actual cost which is being met by any other person, because that amount I will not have to pay. Similarly is the case with any government grant or subsidies received, where an explanation 10 tells you that you have to reduce that from the actual cost. So this amount of 1 lakh will get reduced. Are we clear? Now, what will be the rate of depreciation over here? What will be the rate of depreciation? How 30%, Janvi? What will be the rate of depreciation? No, Kaushiki. Yes. Yes, Janvi. So it's not 30%, right? So the depreciation year will be, my depreciation year will be 15%, right? So then Kaushiki will ask me, ma'am, why did you say wrong to me? Because there will be also additional depreciation of 20%. So you have to read the question carefully and then apply the logic. It is in the business of manufacturing. This company is in the business of manufacturing. Right? No, Kaushiki, why 15 divided by 2? It's used for more than 183 days, right? So then entire year depreciation we will get. Right, Kaushiki? Okay, fine. So I'm not calculating the depreciation, but I've already given you the amount and the actual cost already. Next, details of the other assets. Computers installed in the factory. Computers installed in the factory. What will be the rate of depreciation? Yes. Yes, Viraj, correct. Computers installed whether in factory or in office will be at 40%. Right? It will be at 40%. Are we getting that? Computers installed in the factory, the depreciation will remain the same, which is the 40%. Clear? How about the computers installed in the office? Again, it will be the same. Right? It's 40% and not the rate of the plant and machinery. Are we clear about that? Right? Okay. How about the additional depreciation? Additional depreciation. What about the additional depreciation? Whether you will get additional depreciation on computer installed in the factory, the rate of depreciation is going to be 40. But what about the additional depreciation? Yes. Yes. So additional depreciation, you will get it on the computer installed in the factory. Are we clear? So there will be the additional depreciation as well. So this is, sorry, 40% plus additional depreciation 20%. This is again 40%. How about factory building? What is the rate of depreciation? Pranav, yes, we will get it. Because what does section 32(1)(2)A says that the additional depreciation will not be allowed in respect of any machinery or plant installed in the office premises, any office appliances or road transport vehicle. Are we clear? So we can get it because this can be used for the purpose of manufacturing. There are some technical computers which are installed, so that could be falling under the additional depreciation as well, can be applied. Okay. What about the factory building? Yes. That's 10%. Correct. That's correct. So factory building, 10%. Office equipment, yes. Office equipment also will come into 10% because it's the kind of furniture and fixtures, not 15%, Kaushiki. How about the EPPX and mobile phone? EPPX and mobile phone. Yes. Faster. What is the rate? 40%, 15%. What will be the eligible rate? Yes. 10%. What will be the rate? No. Janvi, no. Pranav, no. No, Janvi. It is not machinery per se. Machinery is something. What is the definition of plant and machinery? Plant and machinery is something which is for the aiding for your business, right? This will not fall into that. This will fall in furniture only. So therefore, on this, you will apply only 10% rate. So EPBX and mobile phones will come into furniture and fixtures. So this is going to be 10% and not 40% or 15%. Okay. This is going to be coming under 10%. Okay. How about the, let's say, one more point, printers and scanners. What will be the rate on that? Printers and scanners, what would be the rate on that? Yes. Printers and scanners. Yes, correct, Pranav. 40% as it forms the part of the computer. So printers and scanners would go at 40%. Are we clear? Okay. The last adjustment, the company has employed the employees. Salary was debited to the P&L account. Date of appointment is given, number of employees is given, salary per month, mode of payment, and type of employee is given. Okay. Now tell me about the ATJJA impact. The first is salary per month is 22,000. Mode of payment is in cash. The employee is a regular employee. What will happen in this case? So what is the difference between the regular employee and the casual employee? You can just add that particular point. So regular employees participate in employee provident fund while casual employees do not. Okay. So what does ATJJA says? Yes, first employee, whether he would be eligible for it, whether the company will get the deduction for ATJJA. ATJJA is the deduction in respect of the 30% of the additional employee cost. If the company is hiring the employees, then the 30% of the additional employee cost is given to the assessee as the deduction for 3 assessment years. For 3 assessment years, isn't it? Okay. Now, what is the additional employee cost? Additional employee cost means the total salaries paid to the additional employees. Total salary paid to the additional employees who are employed during the current year. Okay. Now, what is the additional employee cost? The additional employee cost will be will not be considered if the salaries are paid otherwise than by the account pay check or account pay bank draft or ECS or any other electronic payment. Right? So in this particular case, yes, Chanvi, you're correct. Pranav, correct. Yes. So therefore, in this particular case, the employee will not be considered as an additional employee because the cash payments are made. So 80 double J double A not applicable. So 80 double J double A not applicable as cash salary. Okay. Next, the employee is hired on 1/7/22. 4 employees. Salary per month is 11,000. The salary is paid by account paid check and he's a regular employee. Again, yes. What will happen in this case? Yes. Allowed. Yes. Correct, Pranav. So in this case, it will be allowed because this will be considered as an additional employee. The salary is paid by the account paid check. Further, the employee is covered under the recognized provident fund. The salary of the employee is less than 25,000 per month, and the employee is employed for period of more than 240 days during the year. So yes, this will qualify for 80 double J double A. But not the entire amount. What will happen? The 30% of this. Are we getting that? Next is 25,000 salary. The employee is employed on 1st August 22. The salary is paid by ECS and he's a casual employee. Yes. Yes, correct, Pranav. Because the employee did not take part in PF. So this will get not allowed. As employee not covered by PF. Fine. Next is the employee is hired on 1st October 22. The salary is 30,000, again paid by ECS, but he's a regular employee. Yes. Not allowed, Janvi. Yes, because the salary is more than 25,000. So again, not covered as salary greater than 25,000. Fine. The last one. The employee is hired on 15th October 22. Salary is 10,000 and amount is paid by ECS. He's a regular employee. Yes, Pranav, correct. Yes. Yes. So here he is employed for less than 240 days. So 80 double J double A will not apply. As employed for less than 240 days. As employed for less than 240 days. Are we getting that? In case if the assessee was engaged in the business of, let's say, manufacturing of clothes or footwear or leather products, then whether the assessee would have got this particular deduction even in case of this employee, the answer is yes. So the answer is no still. But just let me tell you, in case The associate is in the business of manufacturing of, let's say if it is apparels or leather or footwear, then for 80JJAA, the employee should be employed for 150 days instead of 240 days. Then in that case, you have to consider 150 days instead of the 240 days. Are we clear? Yes. Fine. One more important point. Let's say this employee, these 10 employees who have been less than for 240 days, but in, let's say, 23-24, they are employed for entire year. Then in that case, the deduction will be allowed in the next year. So let's say, for example, if these employees are not present for 240 days in the current year, but in the next year, or let's say, for example, this employee, let me just change it to this thing. Let me change the adjustment so that you can understand. Let's say this employees, these 10 employees were hired on 15th October 2021. So in the last year, they were employed for less than 240 days. But during the current year, they are employed for the entire year. So then in this case, the deduction will be allowed during the current year. The deduction will not be allowed in the last year, but deduction will be allowed in the current year. So then I would have said yes as employed for greater than 240 days. Sorry. During the current year. Fine. Any doubts? Did you get this sum? Yes. Do you get this entire question? It was very, very comprehensive, covering most of the adjustments of the PGBP. Yes or no? Any questions? Any doubt? Fine. Okay. Let's move on to the next question then. Okay. Okay. This is a small question, but again, very important question. Label tea engaged in growing and manufacturing of tea. The net profit for the financial year 22-23 is rupees 50 lakh. The company was incorporated on 1st June 2020. Following were debited and credited to the P&L. Depreciation is 5 lakh. Charges of 1 lakh 30 paid by an account pay check for advertisement in souvenir published by a political party. Company incurred preliminary expense of 42 lakh. Profit from sale of green tea leaves is 20 lakh. Replacement of the parts of plant and machinery amounting to rupees 15 lakh, for which sum of rupees 25 lakh was withdrawn from the deposit account maintained with NABARD. Rupees 10 lakh has remained unutilized. Other information. The cost of the project is 700 lakh. Share premium is 100 lakhs. Capital employed is 700 lakh. The company has acquired the plant and machinery at 40 lakhs, building at 25 and furniture at 10. The company obtained the bank loan of up to 50% of the cost of plant and machinery, which was then waived off by the bank. Furniture of rupees 5 lakh was purchased in cash. Amount deposited in NABARD on 1/7/23 was rupees 6 lakh. Brought forward business loss is rupees 1 lakh. I'll ask you to write down this question first and then start solving. Yes. Take 15 minutes time, but start solving. Yes. Have you copied the question? Shall we start solving? 2 more minutes. Sorry, I was on mute. Depreciation rupees 5 lakh. What we will do in this case, we'll obviously add it back. So add. Charges of 1,30,000 paid by an account paid check for advertisement in souvenir published by a political party. What you will do in this case? Yes, what would be the impact of this adjustment? Political party. Yes, fast. Yes, fast. Add back. Yes. And then what would be the second effect? What would be the second effect? That's one effect. What would be the second impact? Faster, please. Yes. You have not revised it properly. That is one effect, Janvi. What would be the second effect? Anyone? Amount paid to the for the advertisement in the souvenir for that political party. We will add back this particular 1.3 lakh. That's correct. But what would be the second implication? Yes, faster. Anyone? Before I give my answer. So the charges of 1,30,000 which is paid will be disallowed first of all under section 37(2)(b). Will be allowed under section 37(2)(b). So section 37 subsection 2b prohibits the expenditure, deduction of any expenditure which is incurred on the advertisement in any brochure or souvenir or pamphlet published by the political party. That is not allowable as deduction. The second effect will be under 80GGB, the expenditure which is incurred by an Indian company for any advertisement or for any publication which is published by a political party is considered as contribution to the political party and allowed as deduction under 80GGB. It is allowed as deduction under 80GGB. So therefore, here this will get disallowed under section 37(2)(b), but allowed as deduction under 80GGB. Are we clear? Because this is by the account paycheck. If this would have been in cash, then not allowed even under section 80GGB. So you have to write in which section it is disallowed. It is disallowed under section 37(2)(b). Are we clear? Any questions, any doubt? Yes, Janvi, you were correct. Fine. Okay. Next. The company incurred the preliminary expense of rupees 42 lakhs. Tell me the answer for that now. Yes, calculate fast. For the preliminary expenditure, how much deduction should be allowed? Yes, fast. What would be the preliminary expense which would be allowed? I don't know. Faster. Yes. What do we do? Faster. Okay. So in this particular case, which section which is there, which is allowing you this particular deduction of the preliminary expenses, lakh, right? Now, under 35D, what is the deduction that is allowed to you? What is the deduction which is allowed to you under 35D? Under 35D, the deduction which is allowed to us is, let me just write it down over here. Deduction under section 35D. Now, this is a company. This is what we are looking at is for the company. Are we getting that? So, for the company, the deduction which is allowed under section 35D is based on 1/5 of the expenditure. Is 1/5 of the expenditure. But how that particular expenditure is calculated? How that particular expenditure is calculated in case of the preliminary expense. Now here, what we are going to look at is, first is the cost of the project. So 1/5 of the expenditure is allowed, right? The expenditure which is allowed in this particular case is, first we have to compute based on the cost of the project and the cost of the capital. Now this is applicable to Indian companies and as well as the non-corporate assessee. This is applicable to the Indian company as well as to the non-corporate assessee. Our assessee is the Indian company, right? And these expenditure, what are the preliminary expenditure? In case of new company, the prior period expense, the expenses before the commencement. In case of the existing business, in case of the extension of the existing business, then the expenses for setting up the new business, which are incurred till the commencement of the operation. What is the expenditure which is allowed? 1/5 of the expenditure. And what expenditure are allowed? The expenditure in connection with the preparation of feasibility report, project report, market survey expenses, right? Engineering expenses, memorandum charges, drafting the memorandum of association and article of association, registration of companies, or for the issue of the share capital, whatever these expenditure are there is allowed. Now, in case of the Indian company, what is the cap on the expenditure? So 1/5 is allowed, that is fine. But there is the cap. And what is that cap which is there? The cap is 5% of the cost of the project. 5% of the cost of the project, or 5% of the capital employed. 5% of the cost of the project or 5% of the capital employed, whichever is higher. Whichever is higher is allowed as the cap on this particular. Overall limit is this. The overall limit is this. Are we getting that? The excess will not be allowed as deduction, and whatever the amount will come, the 1/5 of that will be allowed over a period of 5 years. Are we getting that? Now, in this particular case, what is my 5% of the cost of the project? What is the 5% of the cost of the project? 5% of the cost of the project. Yes, what is that? The cost of my project is 400 lakhs, right? So 5% of 400 lakhs. So 400 into 5%, which comes to 20. So 20 lakh. Or what is my capital employed? The capital employed is 700 lakh. Now, what you will take as the capital employed, whether 700 lakh or 800 lakh? Yes, Chanvi, it is correct. Yes, whether you will take the 700 lakh or 800 lakhs. Tell me the answer. If you have revised properly, you would be knowing this answer. Yes, what is the capital employed? The capital employed is the issued share capital, the debentures, and the long-term borrowings. The capital employed means what? The total of share capital plus debentures plus long-term borrowings. Plus the long-term borrowing. So whether share premium will get added or not. Whether share premium will get added or not in this case. Yes, tell me. Yes. Whether share premium will get added fast. Whether will you add 800? No, Janvi, not added. Yes, correct, Kaushiki. Why? Because the capital employed means the share capital, debentures plus long-term borrowings. The share premium will not form part of the capital employed. This is as per This is as per the Berger-Paints ruling. This is as per the Berger-Paints ruling. Supreme Court. Okay? Berger-Paints Supreme Court. So what will be my 5% of cost of capital employed? What will be the 5% of capital employed? So 5% of 700 lakh. So 700 into 5%, 35. So whatever is higher is 35 lakh. And what preliminary expenditure what we have incurred is, the preliminary expenditure is 42 lakh. So obviously that 42 lakh will get added back. So we'll add it back. And what we will allow is preliminary expense 35 lakh divided by 5. So this will give me 7 lakh. Are we clear? Yes or no? Yes? Clear? Okay. Next adjustment is profit from sale of green tea leaves, 20 lakh. Profit from sale of green tea leaves, yes. Sorry. This will get exempt because, yes, Kaushiki, Janvi, correct, because this is the exempt income under section 10(2), because this is the agricultural income. Fine? Okay. Replacement of the parts of the plant and machinery amounting to rupees 15 lakh, for which sum of rupees 25 lakh was withdrawn from the deposit account maintained with the NABARD. Rupees 10 lakh has remained unutilized. Yes. No, Viraj, the entire amount is exempt. Why 40%? Because this is the income from only the agricultural operation and not manufacturing plus the sale of the agriculture. It will not form part of the composite income. Yes, Kaushiki, correct. Yes, Janvi, I'll explain once again the preliminary expenditure. So preliminary expenditure is 5% of the cost of the project or 5% of the capital employed. In this particular case, the 5% of the cost of project comes to 20 lakh. 5% of the capital employed comes to 35 lakh. So higher of that is 35 lakh. Now in the capital employed, I will only take the total of share capital, debentures and the long-term borrowings. Share premium will not form part of the capital employee. Are we clear? So 1/5 of 35 lakh will be 7 lakh, which will be allowed as deduction. Clear, Janvi? Yes, faster. Yes, Kaushiki, that's correct. How about 15 lakhs? Fast. Have you revised 33AB? Okay, let me give you the answer because it clearly seems that you have not revised it. So, if I am withdrawing from the deposit account under 33AB, when do I get the deduction under 33AB? The deduction under 33AB is given when you deposit the amount in the special account with the NABARD. Now, at the time when you would have deposited the amount in the NABARD account, you would have claimed the deduction under 33AB. Now, when you are withdrawing that amount and incurring that amount for the certain expenditure, then again you are claiming the deduction by debiting this amount in your profit and loss account. So once when you deposited the amount, maybe in the last year, you would have claimed the deduction under 33AB. Now again, when you are withdrawing the amount and using for the purpose of expenditure, again you are claiming the deduction of the expenditure. So that's a double benefit that you are trying to get. So 33AB is very clear and it says that the amount withdrawn from the account, which is for the expenditure, deduction of that expenditure will not be allowed. So add back, we will add back the 15 lakh as the deduction of 33AB already claimed for deposit in the account, and therefore the expenditure from amount withdrawn will not be allowed as deduction. Are we clear? What about the 10 lakhs? What about the 10 lakhs? Clear, Janvi? Did you understand? Yes. Add 10 lakhs. Yes, Kaushiki, correct. So, but why it will get added? Any provision in relation to that? Any provision will in relation to the that? Okay, let's try and understand. So, when you withdraw the amount from the deposit account, it cannot be first of all withdrawn except for the purposes specified in this 33AB scheme. It can only be withdrawn for the purpose which is specified, which could be your any business expenditure, any asset purchase, that is fine. But once you have taken the deduction of the amount deposited, you cannot again claim the deduction for the revenue expenditure. You can only withdraw the amount. The amount can be withdrawn only for the specified purposes, or when the business itself is getting closed, or the assessee dies in the case of death of an assessee, or the company gets liquidated, or the firm gets dissolved, or there is a partition of HUF. So only on the closure of the business basically, or on the death of the assessee, you can directly withdraw, or only for the purpose of the specified, which is purpose under the 33AB. Now, amount withdrawn, which is there, amount which is withdrawn. Now, if it is withdrawn and is not utilized, if the amount is withdrawn and it is not utilized, so where any amount from the special account from the NABARD is withdrawn and is not utilized, then the unutilized amount shall be deemed to be the business income. So this 10 lakhs will be deemed to be the business income. So 10 lakh deemed as business income. 10 lakh will be deemed as the business income. Are we clear? Clear? 10 lakh will be deemed as my business income. Are we getting this particular point? Yes or no? Yes or no? Fine. Any doubt till now? Let me give you one more adjustment. I'm just trying to make a space here. One second. Let me give you one more adjustment. Okay. First, we'll take up that adjustment. Let's make this particular amount 23 lakh. So a sum of 25 lakh was withdrawn, right? So instead of 25 lakhs, let's make this as 30 lakhs. Let's make this as 30 lakh, out of which the 10 lakh has remained unutilized, and rupees 5 lakh is used for, okay, let's do it like this. Rupees 3 lakh is used for the purchase of office equipment and rupees 2 lakh is used for purchase of computers. Okay. So 3 lakh is used for the purchase of office equipment. So 30 lakh was withdrawn, out of which 15 lakh was used for the expenditure. Right. And then the 10 lakh has remained unutilized. 3 lakh is used for the purchase of office equipment and 2 lakh is used for the purchase of computer. Now, what will happen about this 3 lakh and 2 lakh? Yes. Yes, so whatever amount you would have claimed as deduction, Janvi, whether as 40% of profit or whether as the amount you have deposited, next year you cannot claim out of that. So if you have, okay, you're saying that if you have deposited more, then you would have ideally got more deduction. But let's say your deduction was restricted to only 40% and the amount deposited in NABARD was more, then you can of course claim the deduction in the next year, because that you have not claimed the deduction in the last year. Correct, Janvi? Okay. Yes, what will happen to this 3 lakh and 2 lakh for the use of the asset? 3 lakh added as office equipment is not eligible utilization. Yes, Kaushiki. 2 lakh will not be allowed as expenditure. No, Janvi. Yes, Kaushiki. 2 lakh is eligible utilization. Yes, correct. That's correct. So the amount of the 3 lakh which is used. Now the amount withdrawn, as I said, has to be for the specified purpose. Now specified purpose does not include the utilization of the amount for any plant or machinery installed in office premises or residential premises, any office appliances other than the computers. So in case my amount is withdrawn for the plant and machinery in the office premise or any office appliances other than the computer, then in that particular case, I will not be allowed that as the eligible expense. So the amount of the utilized amount, the amount which is utilized for non-specified purpose will be treated as the taxable profit. Will be treated as the taxable profit. Are we getting that? Will be treated as the taxable profit. Clear? Just write down. Okay, just write down. One second. Okay. So this is considered as the taxable profit and this is allowed. Now, whether on this computers purchase, will you get the depreciation on the computers? Let me make it more complex for you. We'll write one more adjustment. The depreciation claimed on computers 60,000. Whether the depreciation will be allowed on the computers? Depreciation will be allowed on the computers? Or let me make it 80,000, which is as per the Income Tax Act. Whether this will be allowed on the computers? Yes, Kaushiki, correct. No, Viraj, it will not be allowed because the depreciation will not be allowed as the whole amount itself is allowed as deduction under 35AB. Sorry, 33AB. No, Kaushik, it's not 35AB, it's 33AB. So the depreciation will not be allowed because when you have deposited the amount, you have claimed the deduction of the entire amount. Now again, you cannot claim the depreciation part. Again, you cannot claim the depreciation part even if you have purchased for the computer. So depreciation will not be allowed as deduction. Okay, so just write down. Depreciation not allowed as deduction. As entire deposit was allowed as the deduction. Are we clear? Okay. Yes. Now the company has acquired the plant and machinery at rupees 40 lakh, building at 25 lakh and furniture at 10 lakh. Company obtained the bank loan of up to 50% of the cost of plant and machinery, which was then waived off by bank. Furniture of 5 lakh was purchased in cash. So what is the depreciation on the plant and machinery? What is the depreciation on the plant and machinery? Yes. Faster, what is the depreciation on all the assets? Yes, that's correct. But how much? So 15 lakh is the plant and machinery. Out of that, the 40 lakh is the plant and machinery. Out of that, 50% of the cost of the plant was taken as loan, which was then waived off. So what will be the cost of plant and machinery? 20 lakh, right? It is going to be 20 lakh. So on the plant and machinery, the depreciation amount will be 20 lakh, correct? Because 20 lakh is waived off. 20 lakh is being waived off. So on that amount, we will not consider the plant and machinery. Are we clear? On that amount, we will not depreciation of 15% plus the additional depreciation of 20% because it's a manufacturing company. For furniture, it will be at 10 lakh minus 5 lakh in cash. So only on 5 lakh. 10 lakh minus 5 lakh in cash, that will be again at 10%. Are we getting that? Now again, this is provided. How do you get this particular that the deduction has to be that cash amount is not to be considered as the cost of acquisition? Again, it is provided in the explanation to will not consider over and above 10,000 will not be considered as the cost of acquisition. So proviso to 43, right? Proviso to section 43 into 10%. Fine. Then finally, it is building at 25 lakh, which is again at 10%. Clear? Now I'm giving you the break, but at the same time, I ask you to calculate the deduction for me under 33AB. What will be the deduction for me under 33AB? So let's take a break of 15 minutes, but meantime, you can start calculating the amount. Okay. So let's take a break of 15 minutes. Yes, students. So what is the answer that you are getting? Yes, let's solve together. Viraj, waiver, if the amount has been waived, as we saw in the last question also, the section 43(1) says that if any cost of the asset is met by any other person, that will be not considered as the part of the cost. So that is why it is excluded, the amount waived off by the bank. Clear? 20 lakh is from the plant and machinery, Viraj, which is for the waiver. Yes, Pranav, you will assume it is for more than 180 days. Okay? Okay, let's solve together. Okay. So, my profit was 50 lakh. I'm just putting it below here. My net profit was 50 lakh. Right? In that, I have added the depreciation of 5 lakh. Add the depreciation of 5 lakh. Fine. Then the this amount paid for political party souvenir is 1,30,000. So advertisement for political party is 1.3 lakh. Right? Then we have preliminary expenditure of 42 lakh. This is 42 lakh. Then we have the profit from sale of green tea leaves, 20 lakh, which I will reduce it. Right? Sorry, it's 20 lakh, not 15 lakh, it's 20 lakh. Fine. Next, I have replacement of the parts of plant and machinery, 15 lakh. Next, we had it is the deemed income of 10 lakh. Next, I have is the 3 lakh of the office equipment. Used for office equipment, 3 lakh. Sorry. Depreciation on computer was 80,000. Okay, depreciation on computer was 80,000. Then the cost of the project allowed was, the preliminary expenditure allowed was 7 lakh, right? Then we had the depreciation. So depreciation comes to how much? Total depreciation is coming to how much? 20 lakh into 15%. Or let me put it like 20 lakh into 35%. 7 lakh is the depreciation total. Furniture, it is 5 lakh into 10%, 50,000. And this is 2.5 lakh. So my total depreciation comes to 10 lakh, right? So depreciation allowed is 10 lakh. So what will be my profit here now? 50 lakh plus 5 lakh plus 1.3 lakh plus 42 lakh minus 20 lakhs, then plus 15 lakh plus 10 lakhs, 3 lakhs, you have to add it back. 80,000, you have to add it back. And minus 7 lakh and 10 lakh. What does your profit come to total? I'm getting 90.1 Kaushiki. Yes. What exactly you are getting, all of you? Yes, all of you confirm with me. I am getting 90.1. Am I making some calculation mistake? Yes, 90.1, correct. Matching with all of you. Now, what will be my deduction under 33AB? What will be my deduction under 33AB? Yes, students. What will be the deduction under 33AB? No, Viraj, how 97.3 lakhs you are getting? 80,000 depreciation on the computer, Kaushiki. Depreciation on computer. See, we added back here, right? I told you your depreciation on computer. Depreciation claimed on computer is what? 80,000. So this will not be allowed as deduction, right? So that is the 80,000. Yes, Janvi, 60% is agriculture income. So what will be the deduction over here? First, you will calculate the deduction and then there will be the question of the income, whether it is agricultural or not. But first, what will be my deduction under 33AB? Fast students. Yes. What will be the deduction that we are going to get here? Are we going to subtract the brought forward business loss, 80 double G double C, and then calculate the deduction? Yes, students, please faster. We have to solve one more question. How much will be the deduction, past students? Please calculate for me. Yes. 36.04 lakh, 40%. Deduction is 6 lakh. Okay. Viraj is saying, Viraj, okay, you're giving me the calculation. Okay, let me check whatever your calculations are. So, Viraj, your calculations you have considered is 50 lakh and then 50 lakh and then 5 lakh. That's correct. You have added back. 1.3 lakh you have added back. 42 lakhs you have added back. And 20 lakh you have reduced. That's correct. Then 15 lakh you have again added back. 10 lakhs you have added back. 3 lakh you have added back. Then 80,000 you have not considered, Viraj. Depreciation on computer. And preliminary expense 8 lakhs you have considered. 7 lakh is the preliminary expense which is allowed. 10 lakh. So it's not 80, it's 80,000, Viraj. No, Janvi. First, you will not deduct 60%. First, you will calculate what is your deduction under 33AB. The difference of 7.2 lakh, Viraj, is because of the 80,000 and not 8 lakhs that you have considered. Kaushiki, do we need to reduce the business loss first? Yes, do we need to reduce the business loss first? What do we need to do? Whether we need to reduce the business loss first? Yes, what will be the deduction here? Okay, let me tell you now. So the assessee is entitled to the deduction under 3AB with respect to the deduction which is allowed under 33AB is lower of amount deposited in the bank or NABARD. Okay. Or the assessee is entitled to the deduction which is 40%. The deduction is 40% of the profits. So the deduction will be allowed before setting off the brought forward loss. Before setting off the brought forward losses. Are we clear? So this will be lower of amount deposited or 40% of the PGBP before the brought forward losses. 40% of the PGBP and not the total income. 40% of PGBP and not total income. So here, what will be our deduction is 6 lakh or 40% of 90.1 lakh. 90.1 lakh, 40% comes to 36.04. So lower of this is 6 lakh. So my PGBP will be how much? 90.1 minus 6 lakh. This will be 84.1 lakh. This will be 84.1 lakh. Now, out of this 84.1 lakh, right, out of this 84.1 lakh, there will be the agricultural income as well as the normal income. There will be the agricultural income as well as the normal income. Now, what will be my agricultural income in this particular case? My agricultural income in this case will be how much? Yes. My agricultural income in this case will be how much? 60%. So once I have determined the income, the 60% will be considered as the agricultural income. So then less agricultural income 6 lakh. Sorry, not 6 lakh, 60%. Sorry, my bad. 60% of 84.1 lakh. So what will be the amount? 50.46. So this will give me minus 84.1 lakh, 33.64 is my income, right? Less brought forward business loss, rest the brought forward business loss, how much it is? 1 lakh, 32.64 lakh, less deduction under section 80 double GP, which is for the political party. And how much was that? The 5 lakh. No, it was 1.3 lakh. So my total income comes to 31.34 lakh. Are we clear about this? Yes. Any doubt? Yes. Any doubt? Okay. Yes, Viraj, you will have to. Fine. Is this sum clear? Any doubts, any questions in respect of this particular question? Yes, before we move on to the third question, any doubt? Yes, students. Any questions? Yes, if you have any doubt. Yes, fast. Yes. Shall we move on further? Okay, let's move on further then. Let's move to the next question if there are no further doubts on question. Okay. Okay. So the next question is on April 1, 2022, Export House Limited set up the warehouse in Telangana for storage of agricultural produce. Expense incurred which are capitalized on 1/4/22, purchase of land, construction costs, know-how costs, salaries to staff. Expense incurred during the year. Construction cost of warehouse, purchase of old plant and machinery, import of second-hand machinery from UK, purchase of new plant and machinery, and goodwill. Following amounts are debited or credited to P&L and net profit reported is 98,65,000. Depreciation on building 3.4 lakh and on machinery 3.5 lakh. Cost of know-how of rupees 10 lakh was written off. Donation to political party is rupees 1 lakh. Commission income is 20.15 lakh and dividend is 50,000. Expense in cash 40,000. Brought forward business loss 1 lakh and brought forward specified business loss 2 lakh. So just first note down this question. Yes. Yes, have you copied? Yes, Janvi, correct. Okay, I'll just scroll down. Yes or no? So that we can start the question. Okay, let's get started if it's done now. Okay. So, first of all, tell me what is this question about? Have you identified, Janvi has identified, what is this question about? What is so special in this question? Yes, tell me. Where is this question taking us towards? Yes, Kaushiki, 3580 specific business. Okay. So let's get quickly started. The net profit is 98 lakh 65,000. So that's fine. Now we'll directly come towards the first part. The on April 1, 2022, Export House set up the warehouse in Telangana for storage of agricultural produce. Now this is allowed under 35 AD. Under 35 AD, if you look at, if once you know it's a specified business, so you have to then identify first of all from the nature of the business activities that are mentioned. You have to always identify which type of asset, which type of specific deduction that we are talking about. So under 35 AD, if you see, setting up and operating warehousing facilities for the storing agricultural produce is allowable. The expenditure on that is allowable as deduction under 35 AD. What are the other businesses? Cold chain facilities, natural gas or crude oil. So anything of that sort comes in your question, you have to, Think about that. Okay, this could be the specified business case. Operating a hospital, operating any housing project, any hotels which are there, or for that matter, the warehousing facility for storage of sugar or any agricultural produce, operating the hotel for 2-star or above category, right? So in that case, you have to think that, okay, this is going to be a specified business. Fine. Now, under specified business, what is the deduction which is allowed? What deduction is given to you? No, you don't need to recall the dates of commencement. That would be always there. But just know that, okay, these are the businesses which are covered. So what is the deduction which is allowed in the 35AD? 100% of what, Kaushiki? 100% of what? No, Viraj. So under 35AD, you get 100% deduction of you get 100% deduction of the capital expenditure incurred. Capital expenditure incurred, which is wholly and exclusively for the business. So 35AD would have the 100% expenditure for the capital expenditure. Right? So 100% of the capital expenditure is allowed as the deduction. Further, the expenditure incurred prior to the commencement of the business. Expenditure incurred prior to the commencement of the business would also be allowed as deduction if the amount incurred is capitalized as on the date of commencement of operation. So, 100% deduction of the capex plus the prior period expense if capitalized as on date of commencement of the business. Are we getting that? Now, the conditions which are to be satisfied for 35AD is that the business should not be formed by splitting up or reconstruction. Business should not be formed by the splitting up or the reconstruction. Are we getting that? Are we getting that? Okay. So now let's get quickly started. Right? Now, in this particular case, first is the expenses incurred, which are capitalized on 1/4/2022. So here you can write down expenditure incurred prior to commencement, which are capitalized on 1/4/22. Purchase of land, construction cost, know-how cost, and salary to staff. What will you do in this case? Yes, what will you do in this particular case? Yes, fast. Except land. Yes, Kaushiki, except land, you will get the deduction. So what is the deduction that we are coming up to here? 50,000 will be allowed. Sorry, 50 lakhs will not be allowed because that is for the purchase of land. So capital expenditure other than for the purchase of land. So then 8 lakhs plus the 10 lakh of the know-how cost, and finally the 78,000. 18 lakh 78,000 will be allowed as deduction. Janvi, not 68 lakh. Not 68 lakh. So whatever expenditure, even if it's a salary, which has been capitalized because it's prior to the commencement of the business. But if it is capitalized on the date of commencement of business, that prior period expense will be entirely allowed, except the land cost. So land is not allowed as deduction. Land cost is not allowed as the deduction. So the land cost I will not get as deduction here, very clearly. The land cost I will not get the deduction. Are we getting that? So how much is the expenses which is allowed as the deduction? The first is, as I said, 18,78,000. So if I have my net profit of how much? 98,65,000. 98,65,000. I will deduction under section 35 AD expense capitalized is 18,78,000. 18,78,000. Fine. Okay. Next, we move towards. So purchase cost of land, yes, not allowed as deduction, but everything else would be allowed as the deduction. So 18,78,000. Next, we move towards the expenses incurred during previous year 22-23. Construction cost of warehouse 60 lakh. Purchase of old plant and machinery 2 lakh. Import of second-hand machinery from UK 4 lakh. Purchase of new plant and machinery 9 lakh and goodwill 3.5 lakh. Now we'll go one by one. Whether the construction cost will be allowed as deduction? Construction cost will be allowed as deduction? Yes or no? 78,000 also will be allowed, Janvi. Yes. So construction cost will be allowed. Okay. Construction cost. Here I'm writing except land. Construction cost is how much? 60 lakh. Fine. Then what about the purchase of old plant and machinery? Purchase of old plant and machinery, which is 2 lakh. Purchase of old plant and machinery 2 lakh. Whether this will be allowed? Yes. So there is a condition for allowing the deduction under 35 AD. What I told you, that it should not be formed, the business should not be formed by splitting up or reconstruction of the already existing business. The business should not be formed by splitting up or the reconstruction of already existing business. Second condition is that the business should not be set up by transfer to the specified business of old plant and machinery. So the business should not be formed from the old plant and machinery. Now, there is an exception to that. What is the exception? That this particular machinery will not be considered as old plant and machinery. So even if old plant and machinery is transferred to the specified business, it will not be considered as violation if the value of the old plant and machinery is less than 20% of the value of total plant and machinery. If the value of the total plant and machinery, if the old machinery is valuing less than the 20% of the total plant and machinery, it will not be considered as violation to 35 AD, even if the business is formed with the old plant and machinery. So the violation is considered, the specified business deduction under 35 AD will not be available if the business is formed by splitting up or reconstruction, or the business is formed with the transfer of second-hand plant and machinery. But there is an exception. Exception says what? That it will not be considered if the business is formed with the second-hand plant and machinery if the second-hand plant and machinery's value is less than 20% of the total plant and machinery. Also, the plant and machinery will not be considered as second-hand if it is imported from outside India. The plant and machinery will not be considered as second-hand if it is imported from outside India. So 20% condition will not apply to the imported plant and machinery even if it is a second-hand. 20% condition is for the domestic second-hand plant and machinery. Are we getting that? So here, if you look at the total plant and machinery, which is 2 lakh and 4 lakh and 9 lakh, right? Now this comes to 13 and 15 lakh. Now 15 lakh is the total plant and machinery, right? Now 15 lakh is the total plant and machinery. 20% of that, or let me write it over here. Otherwise you may get confused. So 15 lakh is my total plant and machinery. %20 of that is how much? Is 3 lakh, right? So if my second-hand plant and machinery from India is more than 3 lakh, then I will not get 3580 deduction. But since it is lesser than 3 lakh, this will be allowed. This will not be considered in the 20% limit. For this, we will need not consider any 20% limit because second-hand plant and machinery imported from outside India is not considered as second-hand. Clear? So then I will get here deduction of 15 lakh. So plant and machinery, 15 lakh. Clear? Plant and machinery is 15 lakh. Next is goodwill. Next is goodwill. Will you get the amount of goodwill? Yes. Yes, Janvi, you were correct. Kaushiki, yes, you were correct. Old imported is equal to new. How about goodwill? Not allowed. Yes. So like land, goodwill and financial instrument is also not allowed. So land, goodwill plus financial instrument is not allowed. Is not allowed as deduction. So this will be not allowed. Okay. So my 3580 deduction is 18,78,000 plus 75 lakh. 60 lakh plus 15 lakh. Fine. Now profit is 98,65,000. Depreciation on building and on machinery is 3.5 lakh. What will happen to this? Yes, what will happen to this? What will happen to this? Whether depreciation on building and plant and machinery will be allowed as deduction? Janvi, purchased goodwill, not allowed. Goodwill is not allowed as deduction here. Goodwill, financial instrument and land. Depreciation, not allowed. Yes, Kaushiki, correct. Add back 3.5 lakh. Fine. Donation to political party, 1 lakh. Donation to, sorry, 10,000 and not 1 lakh. It's 10,000. It's 10,000 and not 1 lakh. Donation to political party. Yes, students, fast. Yes, Kaushiki, but what about the second impact? Yes, correct. Later deduction under 80 double GB. Remember the section, okay? So, donation to political party, 10,000, and then you will put it under 80 double GB. You will get 10,000. Okay, fine. Okay. Then donation to political party, cost of know-how of 10 lakh was written off. Cost of know-how of 10 lakh is written off. Know-how cost of 10 lakh was written off. Cost of know-how of 10 lakh. Yes, Kaushiki. Add back because 100% is allowed here as the deduction under 35D. So again, you cannot claim this as expense, right? So we will add back. Cost of know-how. Know-how written off 10 lakhs. Fine. Next, commission income is rupees 20.15 lakh and dividend is 50,000. Commission income is 20.15 lakh and dividend is 50,000. Why Kaushiki commission no treatment? No, commission is for the other business and not for specified business. So these both will be taken as other sources. So I'll reduce here commission income less dividend income. Both of these will be considered in the other sources. So 20.15 lakh and 50,000. And I'll put it on other sources. Income from other sources, commission income, and dividend. Fine. Yes. Expense in cash 40,000. Expense in cash 40,000. Yes, not allowed as greater than 10,000. So 10,000. Okay. Now brought forward business loss and brought forward specified business loss. What will happen in this case? Yes. Now first you will compute the 35 AD, or what will you do here? Calculate for me what will be the deduction under 35 AD. Yes, but we'll, Kaushiki, we will adjust the specified business loss from specified income. But then what about the deduction? Whether you'll calculate the deduction first or whether you will give the loss set off first. Yes, faster. What will be my deduction over here? Yes. Faster, students. Yes, first you will give the deduction of 35. So now what will be my total profits over here? Calculate for me. I am also calculating simultaneously, but please compute. How much you're getting PGBP? After the deduction we have already computed. Yes, Kaushiki. How much is coming after deduction? How come 1,62,000? I'm getting 1,32,000. Yes, others, please confirm your answer. So 95,40,000. Correct. Yes. So then the PGBP I'm getting is 1,62,000. 1,62,000. All of us getting this particular answer? 1,62,000. PGBP, yes or no? Ninety-five lakh 40,000, Viraj. Not 30,000, 40,000. Yes, then what about the brought forward business loss and the specified business loss? I have the brought forward specified business loss of 2 lakh. Yes. Yes, Kaushiki, correct. All others, are you getting this particular answer? What would be the income, total income? Yes, students, faster. Okay, let me tell you. So we have first the brought forward specified business loss that we can obviously adjust against this. So less brought forward specified business loss restricted to 1,62,000. So this will become nil. What about the brought forward business loss? Can we set off against income from other sources? Yes. Brought forward business loss, can you set off against income from other source? Viraj, it is 98 lakh 65,000 net profit and not 96 lakh. And then it is not 30,000, it is 50,000. Dividend income is 50,000. And plus 40,000 expenditure in cash, not 10,000. So I've written it on screen, you can verify. Janvi, yes, so you are saying that business loss brought forward can be set off against the other income? Yes, Janvi. Brought forward business loss, can it be set off against other income? Yes, Janvi, correct. So it cannot be set off. It can only be set off against the business income. Since there is no business income, we cannot set off. If there would have been any specified business income, we could have certainly. But specified business loss cannot be set off against any other business income. Fine. So then here we cannot set off any loss against the other income. So we have now other income, income from other sources, which is commission and dividend. We have 80 GGB, which is 10,000. So what will be my total income now? Calculate the total income for me. What shall be the total income? ₹20,55,000. Yes, Kaushiki. All of you are getting this particular answer. 20,55,000. Is it what you're getting as the answer? Yes. Yes or no? Just confirm once. All of you are getting this particular answer. Yes or no? Fast. Yes. Yes, students, all of you are getting this particular answer. Yes or no? Okay. So I'll give you one sum, which will be your homework. Okay, yes, Janvi. So you can just write down, which you will solve in the next class before we meet. Okay. So just write down. Java Limited is engaged in development of software and providing IT-enabled services. It has two units, Unit P and Unit Q. Unit P set up in SEZ and Unit Q set up in domestic tariff area, DTA. This is the third year of operation. Fine. Export turnover of Unit P and Unit Q. The amount is in lakhs. Amount is in lakhs. 1,200, 920. Domestic turnover 200 and 460. Duty drawback 38. Profit on sale of import entitlement other expenses 420, 473. Net profit 502 and 753. Other information Unit P, with regard to Unit P, expense of 24 lakh. Expense of rupees 24 lakh is in relation to interest paid to the public financial institution paid after or paid on 30th November 2023. 30th November 2023. Export sales proceeds received in India are 1040 lakhs. Export sales of 1200 lakhs include freight and insurance, includes freight and insurance of rupees 200 lakhs. And realization of 1040 lakh includes insurance and freight of 140 lakh. Fine. Unit Q, export sales received in India, rupees 850 lakh was rupees 850 lakhs. Was rupees 850 lakh. Expenses paid in cash, rupees 47 lakhs. Okay. So you are required to compute the income. Fine. Any questions, any doubt? Have you copied the sum? Yes or no, students? Yes. Copy the question. So in the next class, you have to solve this particular question. Secondly, what I'm expecting you to revise is the partnership profits, taxability, what you're going to revise for me. Secondly, you're going to revise the assessment of various entities. You're going to revise the assessment of various entities. So read, invite all of that. You have to revise and come. Are we clear? Yes or no? Yes. Any questions? Any doubt? Yes. Any doubt you have before we close the session? Okay. So if there are no questions, we can just close here for today and we can meet up in the next class. Thank you so much. We can close the session. Yes. Yeah.